It is FOMC week. We've got the FOMC meeting on Wednesday, so we're seeing some pretty low volume coming through here early in the week. I got a couple of requests we're going to look at today. We're going to look at MSTR, TMF, and QQQ. We're also going to look at 4 cryptos real quick at the end. But before we get going, check out Capital Curiosities. They've got a new video that dropped on Sunday for Z Best. A teenager took Wall Street for a $280 million ride. If you find your way over to Capital Curiosities from Trade Cave, go ahead and comment on their video TC so they know where you came from. Let's get going. Also, don't forget about the YouTube memberships for Trade Cave. We got 3 different levels where you can get badges, emojis, shout outs, or on the top tier 1 you get my entries and exits in real time for my trades that I do. Anyways, let's take a look here at MicroStrategy. Now, MicroStrategy I am not a fan of because it is doing the exact same fractal that it did last time. And if we go back in time, you can see this is the 20, not that one. Oh, but it did a very similar play like this before too, where it went up. Oh, it loves this pattern, doesn't it? It makes a high like it did right here. We're going to see a lot of drawings all of a sudden. All right, it makes a high and then a lower high and then a slightly higher high before coming back to the same baseline over and over and over again. And that's exactly what we're doing right now. And we also did that same thing back in 2021. If we go back far enough, see right here, we made this nice blow off top high right here. Okay, made a lower high, lower low, and then a lower high, slightly higher low, and then a higher high, and then a much lower low. It's doing that pattern. It did that pattern back here in 2024, and it looks like it wants to do that pattern again. Now, that doesn't mean that it absolutely will, and I'll say that it's not going to do that pattern if it gets above 430, but if we lose before that, if we lose 359 before going up above 430, well then I'm going to go ahead and say that we're probably going to come back down to about $300 on MSTR. And it is a bit telling since today we were down on MSTR, but Bitcoin was up almost 3%. We'll take a look at that real quick before we move on to the next ticker, but we will look at Bitcoin. We will circle back to Bitcoin at the end here. So it's going to load for a moment. Let's wait. There we go. Bitcoin was up almost 3% and MicroStrategy was flat to down. So that is a big tell that MicroStrategy is likely ready to call it quits. And on Bitcoin, of course, if we go beneath $100,000 on Bitcoin, we got a big old double top here that will crater at least to $92,000, probably all the way back down to $80,000. And I can tell you, I'm probably not going to, I'm definitely not going to be holding on anything Bitcoin related if it falls under $100,000 and holds it for a day or two. So pay attention to that. TMF. This is the treasuries, the 3x treasuries play, the long dated. It's a 20-year treasury 3x fund, and I did not fix my chart. I brought back, so one thing, since we're getting near the end of the cycle for Bitcoin, I brought back the fib clouds. If you've been with us for a while, you've seen my fib clouds before. You know this green and this red cloud here that I've got. And you see how when it hits the top, it tends to come down. When it hits the bottom, it tends to pop up. All right? That's basically how it works. Anyways, how are we looking at TMF? So this is basically the 3x of TLT. Right now, you can see that we hit the 50 and rejected. I have a feeling this is going to continue to reject because there's just no demand for U.S. Treasuries right now because the risk of default is too high. And they're demanding higher and higher interest rates on it. And every time that interest rate either goes up or is not cut by the Fed, these are going to lose value over time. And at some point, this is really going to make our banking system implode. If you remember that crisis in 2023 of March, well, they've been putting a Band-Aid on that ever since, and it is just getting worse. And they're using the exact same Band-Aid to deal with that situation as that situation continues to develop and become worse and worse. Now, what could save us here? I'd like to see it get above the 50-day moving average at 38.29. If we can get above that and test it from above, then I think maybe we can push up to like 44 or so. But if we come down and we lose this low here at 33.59, well, then we've got a lot of ways to fall down, and we could go to the lowest lows this thing has seen possibly ever. Let's go to TLT and see if it's gotten lower lows in the past or not. Come on, you can load. Okay, it'll take a moment, and then after this, we'll look at the Qs. The internet here is bad. Yeah. So if it loses out, the next area of support is going to be at 82 on TLT, which would be let's just do it percentage-wise because we were just looking at TMF, which was like 33 or something. It would be about another 1%. So maybe we'll go down like another $2, so like maybe 31. All right. TLT, look at this. This is the lowest. It's been really, really low for a long time. But just because something is cheap does not mean it's something you want to buy. Especially since it's very clear that the debt situation is not going to be addressed at all by this administration. It's very clear. If you go back and you look at the report, and the Treasury puts out this report every single month, we are currently on track to add over $2 trillion to the deficit this year. Okay, over 2 trillion additional debt to the deficit this year. We are on track for that. All right, and that is just going to make this come lower and lower and lower and lower because no one wants our crappy debt, right? Nobody wants it. I don't want it. Do you want it? I don't think you probably shouldn't want it, because apparently they can't. They're addicted to spending, and they just won't stop no matter who's in power, no matter how much they say that they're going to stop spending. They just spend more. I think the thing is, when you're on the campaign trail, you feel like, oh yeah, I could do that, and then you get in there and you realize, well, no, I can't. But you know, and coming from an administration that did exist already 4 years ago, over 4 years ago now, they should have known that. And they likely did know that when they were making those claims that it was basically impossible. So unless you're going to make the hard choices, which no one's going to do. So this is likely going to continue just to drill down, 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 down until we actually see cuts from the Fed. But not just cuts from the Fed, because if you remember, when the Fed cut, it still fell. You know why? Because the rates didn't actually come down. The Fed only controls the 2-year. Okay, they only control the 2-year, the short end of it. The long end continued to go up because the debt is dangerous. And until that dynamic changes, I am not interested in these, and I am looking at them to continue to fall. But I mean, technically, yes, as long as we're above 83, we're relatively okay. We really need to see it take out 87 and then back test that from above. So it's that 50-day moving average, that orange line, that 50-day moving average. We really need to see it test it from above, and then we've got room up to the 100 at 88, and then potentially even 89 above that for TLT. Same for TMF. We got to get above the 50, hold it, touch it from above, climb higher, cross the 100, and then we've got room up to the 200-day moving average on that as well in that situation. Otherwise, we're just going to fall. So the highest I think this thing's going to maybe move is like maybe 43, but you also have to remember that this, while it's going to move 3 times TLT, but if you've been holding it as it's been coming down, it's going to take a bigger move to get back up here, because the way the math works, when it comes down, it takes more momentum to the upside to move this thing back up to where it was. So be careful with these 3x leveraged funds. Let's take a look at QQQ. So what's going on with QQQ? The only thing I'm looking at on QQQ right now is a wedge. All right, and I'll show you that wedge here. Let me see. Do I have a lot of drawings on this one? Not really. Okay. We've got a wedge. I'm going to show you this wedge right now. And once you see it, you won't be able to unsee it. There's one. And this one right about there-ish. Boom. Wedge, rising wedge. Those tend to break to the downside. When it breaks, we're going to come down. We're going to come down to about 517, okay? If 517 cannot hold, we're going to fill this gap over here, and I'll draw it. I'll draw the gap. Let me get my brush. This gap right here. We're going to fill that gap, which means we're going to come likely all the way down to about 491 on the QQQ if we do not get caught at this level right here at 517.12. If that doesn't catch us, we are going to come and fill the gap. That'd be a pretty great buying opportunity, in my opinion, down at the bottom of that gap. So that's what I'm kind of waiting for right now, because we are coming towards and just grinding towards that all-time high and not quite making it there. And unless we get one big candle that goes right above it, I am very weary of this current setup right now. You can see the momentum, while it is cooling off today to the downside, it is still not looking great. The RSI is nearly overbought. The BX trender is showing that it has some downward momentum, though less than yesterday. We did get an inverted hammer up here, which isn't so bad. And we got a nice green candle, engulfing candle out of it today. It looks like in the post market, it's moving down ever so slightly, but we lose this orange line right here. This one that I'm drawing the cursor along right now, which would represent tomorrow a price of about 529.97. We lose that. We close beneath it, and we open the next candle also beneath it on the next day. That's Wednesday. And FOMC does not come to the rescue, which it sounds like they're not going to, we will fall. The reason we didn't fall further now is because if you look, we broke that line yesterday, but then we immediately opened up inside of that, back inside of the wedge above the line, and went higher. So that's why that was a fake out. That was meant to fake you out. And this could also be to fake you out. Or we could come up to the top of this thing, ride the top above it, and then crater down afterwards. So be wary of that. I am feeling like there is greater risk to the bulls than the bears right now. And I am watching this gap over here to get a fill sometime in the next few months before I'm super interested in the QQQ. All right, let's take a look at Bitcoin. All right, Bitcoin. I keep saying this, $100,000. That's the mark. We go under $100,000. That's bad news bears. We are not going to have a good time under $100,000. And if we drop $100,000, we're going to quickly hit mid 90s. If we lose mid 90s, we are going down to the 80s. And congratulations, the cycle is over for this time. All right, this time it's over, and we have to wait until another 4 years, possibly waiting till, you might be able to get in early in June 2026 at the bottom, or maybe October 2026, whichever one of those two will bottom, and then wait until 2028 to see it rise higher again from there. Okay, so that's basically where we're at with that. We are still in an uptrend. And if we go to the daily, we go to the, let's look at the daily momentum is looking pretty good. You can see right here, it is a light red. It was dark red for a while. Now it's light red. That's pretty good. If it turns green again, we'll be feeling pretty happy about that. Let's go look at the monthly though. The monthly is going to give us something, some kind of tell here on this one. The monthly is still looking pretty good, and we can get like another month, maybe two, of that green momentum before we see any kind of red momentum coming through. And if it's truly the bull like it was before, we'd get 1, 2, 3, 4, 5, 6, 7 of those before we fall down. Lately, we've been getting 4, 5 in a row, and then 4, 5, 2 to 5 darker green ones before continuing on again. In 2017, we got a whole bunch of them, a whole mess of them before we started coming down. So this bull run is irregular in that we are not getting as much of the green bars coming through, as much impulse as previous years. And right now we are at highs. We are kind of stalling at highs. We really need the month of June to close out above $110,000. That would be ideal. That would give us a feeling that this could continue to go higher. Otherwise, we're going to be having a bad time, potentially. All right, let's take a look at Sol USD real quick. We're going to look at Solana. Solana is, look at the monthly. It's not looking so great. It's getting weaker, weaker, and weaker, weaker, and weaker. We really need to see a light green bar come in June or in July. It's got to happen. We got to see it. Otherwise, it looks like we're just happy at being where we are right here, and it's not going to go anywhere from there. Take a look at a 1 week. The 1 week is a little bit better. We got a light green bar on there. That's good. Our side's looking like it's trying to curl up. This right here is looking very much like a bull flag, potentially right there. Let me hide all those drawings again. Yeah, it's looking a bit like a bull flag. I don't mind it. We're holding above this equilibrium price on the VP for the week on the volume profile. That is looking good as well. I like Solana where it is, but I am weary of it coming down from where it currently is. You can see that on the daily, the momentum's been kind of bad. Hide my drawings again. The momentum's been kind of bad. We are in a downtrend that we do need to break above. So basically, we've got to get above this 200-day moving average at 160.197, touch it from above, and then continue on. And then there, or just slice right through it and take off from there. And then we've got room all the way up to about 258, or even the all-time highs, especially off of this cup right now that we're looking at. We're looking at a cup and handle. We break that handle to the upside, and let's see how much higher can that handle go. We go from here, go from the bottom, and we go up to there. Yeah, that cup and handle will take us up to about 277, and then from there we'll need to get some extra little boost to go a little higher. Okay, that's what we're looking at there. Let's take a look at Ethereum, ETH, USD, Ethereum. Same situation. I added to my ETH position right now just in case, because we're holding above the 200-day moving average, and we have for a while. ETH, when it goes sideways, it tends to move explosively in the direction that it was already moving. So like we got this big explosive move. It never consolidates like this at a top. If you look at the tops don't consolidate. Tops tend to come up, and at least not that long. Give you like maybe 3 or 4 days, maybe 5, 6 days, and then boom, crater down. Right now we're just holding. If we lose here, that's basically it. We're gonna come all the way down to like 1700, which sucks. So if we go beneath the 200-day moving average, I would cut this position. I would cut this position beneath the 200-day moving average. If it closed and opened a new candle beneath that, okay, I'd be looking to close it, because in that situation, I'm watching it come back down to about $18 to $1,700. If we can get out and above 2741 and close a candle up there and open a new one and close that one up there too, have 2 days worth of candles above that, well then I'm looking at this to run all the way back up to $4,000. And that's why I took a small position today. I took 20% of my wanted position for Ethereum. So 1/5 of the position I want to have in Ethereum, and I bought that today just in case it launches before or during FOMC. And after FOMC, I plan on adding the rest of my position in increments of 1/5 at a time generally. Right now, I might go a little heavier if we get a good dip that stays within the range that I want it to, or if I get an insane rip, I'll be adding more than that 20%. But that's basically what I'm doing right now with that. Okay. Last one, Doge. Dogecoin, I haven't talked about Dogecoin in a while. I own a decent amount of Dogecoin. I bought about $3,000 worth of Dogecoin at about between 15 and 18 cents. Currently, we're at 17.9 cents. So I'm basically at break even for my Dogecoin. I've been buying it since back here in March and April. A little bit. I didn't buy any in May, but I did buy some in June. So I held through this little pump here, came back down to this level, didn't break it. Didn't break this little nub down here, so that actually got me very interested. So I've been buying it the last couple of days. I'm looking at a potential double bottom coming through. Do I have too many drawings on this one too? No, I don't. Nice. All right, let's get some drawings. So this double bottom right here could take us right back up to about 25 cents, no problem. We also are looking at a bit of a cup and handle right here. If that breaks, that's going to take us right up to like 40-ish cents again. Let me look and see if that validated it or invalidated it or not. About right there. I'd say it is right on the line. It's right on the line of invalidating it. If we make a new low under this one, then I'd be like, yeah, no, that's not going to be a cup and handle. But it's reaching the extremes there, if you will. One more thing, if we do the best line on a crypto chart you're ever going to have, this one, and we haven't quite broken that one yet. So we really need to see this one break that one, and we break that one. Yeah, we're definitely coming back up to here. Let's see, what about this one? So I bought when this one broke. When this line broke, I started to buy. I was hoping that this was going to be that move up, but it kind of failed right there. So I really want to see this line right here break, and then we'll be moving up to like that 40-cent range, maybe even to this high, or maybe even dwarfing that high again and running for all-time highs, because Dogecoin has not hit all-time highs yet. It has not hit its all-time highs yet. If you can look at the momentum on the daily is looking like it's ready to break out again. The RSI is looking like it's ready to roll. Let's look at the weekly. How's the weekly doing right now? Okay, weekly is, yeah, it's looking like it wants to do double bottom on the weekly. The BX trender is showing bad momentum on the weekly, so I don't love that. So we'll see. We'll see what's going to happen here. If I lose like 16 cents, well, then I'll be looking at to exit my Dogecoin, which would be what the 200 week moving average at 15.96 cents. Anything beneath that, we close beneath that and open another weekly candle beneath that without it trying to immediately move back up. Well, then I'll be thinking about closing that. Let's take a look at the monthly, see how the monthly is doing. The monthly is still making a lower high on the BX trender, so we could see some this could go bad. It is a meme coin after all. So let's take a look at this. Yeah, we're not even close to touching that on the monthly. Let me take a look at what about this one. Boom, right about there. This is probably the one I'd want to see. If it were to hit any of the downside ones, it would be down here, and that would be about 14 cents. And if it held at 14 cents, then I'd be looking for a huge move up from there. We'll see, though. We'll see. I don't know if it's going to hit that, because it did already come back from that big pump up. Let me do this. It already did come back from this big pump up to tap this line once. So hopefully it doesn't come to tap it again. Because back here, it really didn't tap it a second time so much. It just kind of was hanging out near it, hovering sideways for, like, what is that, 1, 2, 3 months, and then it started to take off. We're at that 3-month range right now. July is generally a pretty good month for a lot of cryptos. We'll see. We'll see what happens with this one. Yeah, we'll see what happens. Anyways, that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio. Check out the channel memberships if you're so inclined. Don't forget to visit Capital Curiosities. Leave a TC in their comments section for me. That'd be very helpful. Thank you very much to you for that, and have a profitable day.